You heard the way we opened the programme. There seemed to be a concrete ideology when you were alongside the president in his first term. How would you describe this moment? What is this all about?
You know, no one knows for sure. But I think what we've seen evolve in the Trump presidency is this desire to negotiate and get a deal. So ultimately, is Greenland all about getting a deal? We know that the North Atlantic is becoming much more of a sought-after territory from a militaristic standpoint. So I understand the president's concern to have a military presence and protection of the North Atlantic. As if we want to expand our air defenses, Greenland is a pretty strategic spot. So I understand what the president's interest is. They also have rare earths, which is something that we in the United States can't supply to ourselves. So the question is this a negotiating posture to get a deal with Greenland, to get more rare earths, to get a larger naval and air force presence? And it may be. It does seem like that's on the table, and this may all evolve in a place where the United States ends up in a very good strategic position.
Do you think that's the way the business world sees it, coming into the World Economic Forum this week?
You know, I think the business world's split on it. You know, you've obviously got a European presence here and a U.S. presence here. I think the U.S. presence is a little bit more optimistic that this is going to end in the right place, and we've seen this before. I think the European contingency is a little more leery and say, look, you know, maybe you're confident this ends well. We don't like being in the middle of this right now.
Which is a reason why, in European hours, Treasuries were selling off much more. The dollar was much lower. And as the U.S. wakes up, people are coming in and buying it. How much is the Sell America trade real, and how much is it a perception based on these moments, the ones that we saw on Liberation Day?
Look, there is some Sell America going on right now. I've met with a couple different asset managers this morning, said that global funds are reallocating a little bit out of the United States. So you see that, you know, interest rates are higher, so people selling bonds, rates go higher. People are repatriating currency back home. They're selling dollars to buy local currency. They're selling stock market. They've got to repatriate currency. So I think we're seeing a little bit of that. I don't think that's what's driving the overall market right now. It doesn't feel like we've got to liquidate America. It feels like we've got to trim around the edges in asset allocation models going on.
This goes back to the wrestling match we were describing. AI on one side, you've got politics on the other, and they're facing off, and it's sort of Sell America until AI rears its head and gets in the lead, and that's what we're doing.
And it's Sell America until the light turns green and everyone has to buy America again.
Right.
Because in the real reality, if you look at the U.S. economy and what's going on, we've got one of the strongest economies in the world today. You know, we're growing at 5+% growth. You know, we've got a pretty good tailwind going on behind us. I mean, right now, the only thing stopping is all this geopolitical risk. If and when, and I say when, this geopolitical risk settles down, the market's probably going to take off again. That's been the history of this pattern.
Settles down. Gary, 2.5 weeks ago, we captured Nicolas Maduro. It feels like a decade ago. Now we're sitting in Davos talking about Greenland. You think geopolitics will settle down under a Trump administration?
2 weeks. Yeah, we're going to settle down. I think that there's a couple balls up in the air right now.
Well, a couple.
But, you know, this too shall pass.
Greenland.
We can go back in the last 12 years, and there's been periods of time where we've had these, you know, highly volatile geopolitical moments. We're in a highly volatile geopolitical moment right now. And by the way, I'm not sure it's a coincidence that Davos is right in the middle.
All right, interesting. I want to ask you about the Fed chair race, because you were in the room with the president in Trump 1 when he decided to go for Jay Powell. What kind of questions do you think he's lobbing at these individuals? And in the end, who do you think it's going to come down to?
Look, the president's in an enviable position right now. He's got what we know. He's got 4 really highly qualified candidates. Any one of those 4 could do a really good job in there. I think the president at this point is trying to understand the sort of mindset of the person he's going to put into the position. The president clearly has a view on what interest rate policy should be. The problem or the opportunity with the Fed job is once he appoints someone into that job, they're an independent agency, and he loses his day-to-day contact with that person. So I think the president learned in the first administration that it's very important to who he puts in that job, and that he should make sure that he's very comfortable with their policy mandate before he appoints them.
Do you think it's become even more important now that that individual needs to have the ability to persuade the rest of the committee in a way that maybe a few years ago that wasn't as relevant? There's just a sense on Wall Street that the president's approach in the last 12 months has galvanized the rest of the committee to dig in.
Look, I think the committee structure is going to be the committee structure. I'm not sure if the chairperson can ultimately sway the committee that far. Could they sway one vote or two votes potentially? But you've got some very strong regional bank presidents. You've got some very strong governors in the Fed. I think the Fed ultimately, at the end of the day, is going to be a tough group to persuade. I think they'll come out in the right place. I mean, historically, the Fed has done a very good job. Have they been a little bit late? Yeah, they were late in the transitory inflationary problem of COVID. But they've caught up. They've gotten to the right place. And I think if you look at the Fed through the cycle, they end up getting to the right place.
You were diplomatic about the four candidates. Can I just talk about some of them individually?
Can.
Governor Chris Waller. You can too.
Yeah, you can.
Governor Chris Waller, I believe you were part of that process, right? Mm-hmm. Vice Chair Clarity, you were part of that process too. What was the president's approach to that process back then? Was he as involved as he appears to be now?
He was not as involved then, but remember, he was a first-term president who was an outsider to Washington. That was part of his mystique, as he was an outsider to Washington. He knew he had to put someone into the Fed chair's role, and he approached it. But I think now, understanding the importance of interest rate policy and understanding his view of interest rate policy, he's taking considerably more time talking to the various candidates.
I'll ask you the question that might get you in trouble. Is Kevin Walsh a chameleon? Is he a hawk? Is he a dove? Is he whatever it takes to get the job? Why didn't he get the job last time?
Look, Kevin is highly qualified.
Without a doubt.
Kevin has served in the Fed.
Without a doubt.
Kevin was there during some of the toughest days of the Fed during the financial crisis. I personally was dealing with Kevin on an hourly basis as we were trying to figure out what was going on in the United States financial system. Kevin was an active participant in the outcome that we all benefited from. And without Kevin's wisdom, I'm not sure we would have ended up in the same place. He's a highly qualified candidate.
It sounds like out of the four, that's who you'd like to see in the seat, based on that strong defense of Kevin Walsh.
I think Kevin Hassett's a great candidate. I worked with Kevin Hassett when I was in the White House. He was the CEA director.
Share your thoughts on Kevin Hassett.
Kevin Hassett was an excellent CEA director.
Let me tell you what some people say about Kevin Hassett, that if he's appointed, that's a puppet of the President of the United States. He'll sit there, smile, and do whatever it takes. Is that unfair?
You know, you and I both know, whoever gets appointed, there will be people that are disappointed and will have negative things to say about him. On the flip side, there will be people that will be very happy with whoever one of those four gets appointed. And if it's a fifth candidate we haven't seen yet, they'll be equally as happy with that one.
There is a sense that whoever's going to be there, they're going to cut rates. How much is the entire build-out of AI, which is what you spend most of your time talking about here, based on the idea that the Fed is going to be easing policy no matter what?
Look, the AI build-out and rates, they're linked, but they're not inextricably linked. This AI build-out is being built because there's demand, there's forward demand, and the AI companies feel like they are behind the curve in being able to facilitate the needs of their clients. They are going to build these data centers. The only question that rates have is what is the ultimate all-in cost to build these things? And interest rates are going to be important. These are big, huge CapEx expenditures with 30-year lives. So, you know, the amount of interest you're going to pay to finance one of these centers is important. So 25 or 50 basis points has a lot to do with these decisions. But I will caution you, like I always do, the Fed only controls Fed funds. They control overnight rates. You've been talking all morning about the 10-year. The 10-year is at 4.30. Where these data centers are going to be financed, they're going to be financed to the medium, to the long, to the very long end of the curve. It's going to be a combination of duration. Fed funds is not going to affect that. So Fed funds could possibly go down, and the interest rate to finance a data center could be unchanged.
Do you miss the trading floor?
Of course you miss a trading floor.
Yeah, I get the feeling you miss the trading floor. Can you imagine how scary things were back at Goldman back in the day?
But that's when
first-year analyst, Gary's walking the trading floor.
Yeah, I think that he would have probably.
But John, that's when there really were trading floors. Right. Like you actually stood up and talked on phones and spoke to each other. And
did it prepare you for the West Wing?
Now it's machines. Now it's machines.
Did it prepare you for the West Wing?
It did. It did. It very much did.
In what way, Gary?
Just, I think, the ability to be watching 5 different things going on at the same time and be listening in 5 places. People in the White House were always amazed that I could be like having a conversation over here and talking to someone behind me because I heard them talking. But when you grow up on a trading floor and you grow up in a trading environment, your eyes and ears have to see everything.